Welcome to Alpha Recap, your end-of-day market wrap from stockalpha.ai. Markets closed and we've got a lot to unpack. Concentrated leadership from tech and media, energy tightness, and some supply chain wins in solar and materials. As always, if you have questions, you can reach us at stockalpha.ai.
Hey, great to be here. What really stands out here is the split personality of the market. A few big themes drove the winners, while regulatory calendars and geopolitics stirred the laggards.
Right, the market closed with concentrated leadership, not a broad rally. Technology and communications were headline stories, while crypto, cannabis, and parts of healthcare felt the regulatory drag.
And the day had real crosscurrents. Energy was tight because of geopolitical noise near the Strait of Hormuz, and that pushed crude prices higher even as solar manufacturing milestones were celebrated.
Let's start with media and streaming because that was a clean, headline-driven outperformance. Netflix reported first quarter results that beat expectations, and it reiterated full-year guidance.
It was one of those relief rally moments. Netflix exceeded expectations, held guidance, and that loosened pressure on smaller streaming players who had been under the microscope for months.
Analysts note that when a market leader like Netflix beats and holds guidance, it often eases a valuation overhang across the sector. Content spending plans get clearer, ad monetization conversations pick up, and that feeds back into studio decisions.
Yeah, that tracks. And then Roku announced it now reaches 100 million households. Big distribution scale. That's meaningful for ad inventory and bargaining power with marketers.
Distribution scale translates into ad supply and better CPM dynamics over time. So the communications and media theme had a nice catalyst today.
Right, and the other thing is, AI headlines kept popping up across tech and media. So it wasn't just subscriber numbers. Funding rounds, new models, partnerships, those kept risk appetite tilted toward digital adjacent sectors.
Okay, shifting to energy and utilities, this was a two-track story. On one hand, geopolitical tensions near the Strait of Hormuz tightened markets and pushed Brent above $99 a barrel, which helped traditional energy names.
On the other hand, we saw concrete supply-side wins in the energy transition. Suniva announced plans for a 4.5 gigawatt manufacturing facility, and regulators approved a UL-listed battery system.
Exactly. So market participants had to balance a near-term fossil fuel price premium with a structural build-out in solar and storage. That's a recipe for selective winners across utilities and supply chain names.
And it's worth explaining why those solar milestones matter in plain terms. A factory announcement and certified battery systems shorten lead times and reduce execution risk. It's not instant electricity, but procurement cycles and early contracts tend to follow.
That's where industrials and materials come in. We saw reports of commercial yttrium output in advancing rare earth projects. Those feed the green economy. Magnets, specialty alloys, batteries, the works.
Exactly. Rare earths are the nuts and bolts of motors and electronics. More domestic capacity reduces geopolitical concentration risk, which is particularly important for defense and EV supply chains.
Let's pause for a quick reaction segment.
Not what anyone expected, right?
Yeah, absolutely.
Honestly, I was a bit surprised by the scale of the solar headline.
Same. Moving on, crypto had a mixed day. Morgan Stanley flagged increasing institutional plugins, low-fee Bitcoin ETFs, and pilot programs in places like South Korea, but miners were liquidating and the CFTC kept scrutiny on the sector.
So it really was institutionalization versus structural fragility. ETF flows and bank products suggest growing adoption, but concentrated miner selling and regulatory oversight can quickly create volatility.
That's a good way to put it. Analysts note that ETF inflows historically dampen realized volatility, but they don't make crypto immune to idiosyncratic shocks, especially when enforcement or legal changes are on the table.
Cannabis felt that calendar risk too. A $180 million scaling brand, and retail openings showed commercial potential. But court filings, licensing appeals, and rejected testing mandates kept valuation pressure intact.
Right. There's growth upside, but legal uncertainty keeps investors cautious. The sector is bifurcated. Strong retail stories on one side, regulatory risk on the other.
Healthcare was kind of the same. Scientific progress in oncology and genomics on one hand, and public policy worries like pending federal reviews on the other. Mixed signals led to muted conviction.
Let's do a brief rundown of the biggest single moves and why they mattered. Quick bullets, conversational.
Netflix beat first quarter expectations and held guidance. It relieved pressure on the media space and made ad subscription hybrids feel more credible.
Roku reached 100 million households. Distribution scale equals potential ad inventory and bargaining power.
Suneva's 4.5 gigawatt plan and UL battery approvals. Concrete signs that the manufacturing side of the energy transition is starting to move from policy to production.
Brent above $99 a barrel after the Strait of Hormuz disruption. Geopolitical risk added a commodity premium that touched many sectors.
Commercial yttrium output and rare earth project activity. Strategic for EVs, defense, and supply chain resilience.
Crypto, institutionalization signals like ETFs versus minor liquidation and CFTC attention. A structural tug of war that made the sector volatile.
Cannabis headlines that mixed a $180 million commercial win with legal headaches. You can see why valuations stayed split.
Good recap. Now let's translate this into accessible, actionable insights. For informational purposes only.
First, monitor event calendars and regulatory dates. The next few weeks had a lot of potential inflection points. Licensing appeals, CFTC guidance, federal healthcare rule reviews. News flow there historically drives outsized short-term moves.
2. Watch how companies talk about AI in earnings commentary. When cloud providers or ad platforms explicitly link revenue growth to AI deployments, analysts often revise models quickly.
3. Track commodity and shipping risk premiums. With crude north of $99 a barrel on geopolitical tightness, energy-sensitive sectors like transportation and industrials can feel margin pressure fast.
4. Follow solar supply chain signals. Announcements like Suneva's plant or certified batteries usually precede procurement and EPC activity. Those are lead indicators for utilities' exposure to solar and storage.
5. Treat crypto flows as a volatility barometer. ETF inflows, minor reserve changes, and pilot programs give a clearer read on institutional appetite than price movements alone.
6. Be selective within real estate. Midtown Manhattan leasing and record industrial demand at major logistics landlords didn't cancel out housing affordability stresses. Real estate moves were asset-specific.
7. Prepare for cross-sector second-order effects. Higher oil can push through to consumer margins, while growing domestic rare earth output can ease certain supply pressures, but boost mining capex.
Let's add notable risks to watch. Execution risk in materials and solar projects is real. Permits, equipment lead times, and financing can delay the promised cash flows.
Political and legal volatility in cannabis, and some parts of healthcare can flip revenue trajectories quickly. Regulatory calendars matter more than most investors assume.
And regulatory policy for crypto remains a wild card. Agencies like the CFTC are active, and structural changes to oversight or tax treatment could alter the landscape fast.
Finally, macro and rate implications. If energy prices stay elevated, we could see renewed inflationary pressure, which feeds into rates and then impacts real estate and consumer discretionary.
Quick reaction segment, short lines.
Big move in streaming today.
Energy was a headline for sure.
Materials had a quietly important day.
Now looking ahead, the article called out 4 trajectories to watch over the coming weeks. Let's put those in plain English.
Number 1. Listen for AI monetization language in earnings calls. When management ties growth to AI features, that's often a precursor to analyst upgrades.
Number 2. Track regulatory rulings and legislative movements, especially for crypto and cannabis. Those calendar items can move prices sharply and quickly.
Number 3. Watch whether announced solar and storage manufacturing actually lead to procurement wins. If early contractors start showing revenue, the headlines were more than hype.
Number 4. Monitor commodity and shipping data for signs that energy tightness is persistent. That affects margins, capex plans, and even interest rate expectations.
So, takeaways. 1. The market was led by platforms and distribution scale. Tech and communications benefited from clear monetization signals. 2. Energy showed both near-term tightness and a parallel build-out in renewables. 3. Regulatory calendars will keep pockets of the market choppy. Crypto, cannabis, and parts of healthcare are front-row seats for that action.
And 4. Materials and utilities showed early signs that policy commitments are starting to translate into industrial activity. But execution risk remains the big caveat.
So, what I'd say to listeners is pay attention to the narrative shifts in earnings calls and regulatory calendars. Those were the real market movers today.
Quick reminder, this is informational only. We're not giving personalized advice or recommending any specific stock or strategy. Analysts note trends and risk factors based on public information.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next market close with more sector context and the biggest headlines you need to know. Until then, take care.